All right, hi everyone. Welcome to today's webinar brought to you by IronFX, where we're going to be taking a look at gold, uh, and whether it's a reliable store of value or not. All right, okay, before we begin today's webinar, right, please take note of the disclaimer, right? The information is not considered as investment advice or investment recommendation, but instead is just marketing communication. And also take note of the risk warning that comes with trading the products on IronFX. The products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. All right, and as we progress through today's webinar, do not hesitate to drop your questions in the Q&A box or in the chat box at any point during today's session. All right, oops, hang on, what's going on here? All right, okay. Oops, okay, right. All right, okay, great. Right, okay, and also please take note of the disclaimer, right? Okay, aside, before that, right, my name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between IronFX and Harvest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so here's the agenda for today, right? So we're going to take a look at what are the key factors for investing in gold, and we'll also continue to see whether this precious metal continues to remain in demand. And we've seen gold prices surge over the last 2 to 3 years, and even especially this year, right? In just 4 to 5 months, gold prices have rallied very strongly as well. And of course, then we'll head on over to the charts of trading view and look at some of the key technical setups that may present itself today or next week. All right, let's take a look at some background and fundamental information with regards to gold. Let's take a look at some of the key factors driving this precious metal, right? Of course, there are fundamental factors such as supply and demand, inflation and interest rates, global economic conditions, as well as central bank policies. Now, supply and demand, generally speaking, right, gold supply is relatively stable, while demand can fluctuate with economic conditions, central bank policies, and investor sentiment. But as long as there's no major disruptions, two major gold mining facilities, and no major disruptions to supply chains, right? Supply chain for gold supply, sorry, is relatively stable. However, demand is the one component where it can fluctuate more wildly when it comes to gold. Right now, with regards to inflation and interest rates, gold often performs well during periods of high inflation or low interest rates, as it is seen as a hedge against inflation and a store of value. Now, what had happened in 2022 to 2024, although inflationary pressures were rising, we also saw interest rates rising over the same period, right? As central banks around the world, including the Fed, raised interest rates aggressively in 2022 till 2024. This was done to combat rising inflation, right? So inflation surged over this period, but because central banks were also raising interest rates aggressively, they also were high as well. So we were in a period where we saw high inflation and high interest rates. And during this period, we would see that gold did not uh, appreciate as much as we would have expected it to do so. Now, if over during that period we had seen inflation surge while interest rates were kept low, that would have been an environment where we would have seen gold prices rise quite substantially. Now we'll come to that later on in the charts once we move on over to the charts on TradingView. Now, looking at global economic conditions, of course, gold is a precious metal, which is also deemed as a safe haven asset, and we see many investors and traders buying this precious metal during times of economic uncertainty, such as recessions or financial crisis. Now, central bank policies also impact gold, right? As they cut or raise interest rates, it affects the value of the currencies, and particularly for the US dollar, right? As gold, of course, as you may know, right, is priced in US dollars. And generally, gold and the value of the dollar share an inverse relationship. So typically, when the value of the US dollar is falling, we can expect gold prices to be supported and to continue rising. Conversely, when the value of the US dollar is high, we can expect gold prices to come under pressure, right? And that is all influenced, also, of course, partly influenced by central bank actions, policy actions. Now, there's also market factors, right? Gold prices, despite being a safe haven asset, can be volatile as well, and investors should always be prepared for price fluctuations. Now, market sentiment also can play a big part, right? Investor sentiment and market trends can impact gold prices, as well as with currency fluctuations, particularly in the value of the US dollar. Now, investment factors, right? People do not only uh, buy gold for hedging purposes or safe haven purposes, but they also buy it for longer term investment goals as well, right? So it is also important to note or determine your investment objectives such as diversification, hedging, or long term wealth preservation. And just like any investable asset, there's always a level of risk associated with it. So even gold, despite being sought after precious metal, despite being a safe haven asset, there's always a certain degree of risk associated with investing or trading in gold, right? So always assess your risk tolerance, as gold investments can be subjected to pretty wild market fluctuations. Also consider your investment horizon, right? Consider your investment time frame, as gold investments may be more suitable for longer term investors. Now, also take note of fees and expenses. Now, this could be related to um, uh, ETFs, for example, or mutual funds when you're buying gold via mutual funds or ETFs, or if you're buying physical gold and having it stored by that provider, right? There can be fees and expenses associated with such gold investments, right? You can have management fees, storage fees, and of course, transaction fees. Right, investment options, how are the ways that we can invest in gold, right? There's several ways of investing in gold, right? You can buy physical gold. This can be in the form of gold coins, bars, and bullions. You can either store this, of course, in the safe in your home or store it in the safe deposit at the bank, or you can even have certain institutions, right, that will store and safekeep your physical gold for you as well. You also have gold ETFs, right, which are exchange traded funds, which track gold prices, and these are available. There's several ETFs that can be tradable via the US exchanges. You can also invest in gold via gold mining stocks, right, via the gold miners, right? If you do not wish to invest in gold directly, whether in the form of physical gold or ETFs or mutual funds, there's also the alternative of investing in gold mining stocks as well, right? Which gives us exposure not only to gold prices, but of course to potential dividends as well. You can also invest in mutual funds, right, which pool money from multiple investors to invest in gold-related assets. However, mutual funds generally tend to have higher fees and expenses as compared to buying gold ETFs or even buying the gold mining stocks, and of course, investing in physical gold itself as well. Right. So, in terms of expenses and fees, generally speaking, gold mutual funds tend to have a much higher value or much higher charges. Now let's take a look at what are the key drivers for gold, right? Remember, as we mentioned, it is a safe haven demand. It's a it's a safe haven asset, right? Hang on, just let me adjust this title of the slide. This should read as safe haven asset, right? So in periods of during periods of geopolitical tension, geopolitical conflicts, as well as global economic uncertainties. There's a flight to safe haven assets, and gold is one of them. Right, conflicts, wars, and political instability can drive investors and traders alike to seek safe haven assets such as gold. And of course, economic downturns, recessions, and financial crises can also increase demand for gold as a hedge against uncertainty. Now, monetary policy, right? Monetary policy is also a big driver. When interest rates are low, this can make gold. This typically can make gold more attractive in terms of investment, as investors seek alternate assets with potential for returns. Now, remember, especially in the period where in a macroeconomic environment where interest rates are relatively low, while inflation is relatively high, this is an environment where gold prices tend to climb higher during periods of quantitative easing as well, right? The Federal Reserve and many other major central banks around the world have embarked on or carried out quantitative easing policy measures following recessionary periods, right? This is to help provide liquidity to the financial markets and to stimulate economic growth. And during such periods as well, we can also see gold prices continue to appreciate due to money printing activities, which can lead to inflation concerns. Right? Remember, during this period, during periods of quantitative easing, generally interest rates are kept as low as possible in order to stimulate economic activity, right? And these money printing activities can uh, raise inflation concerns as well, which then drives investors towards investing in gold as a hedge. Now, global demand, where do we see demand for gold, right? We can see global demand coming in the form of jewelry demand, sovereign reserves, right? And all of this is also demand, also, of course, production also impacts all these various or these are the components that can impact and cause gold demand to fluctuate as well. Right, monetary policy actions, market volatility due to geopolitical events, value of the US dollars, demand for sovereign reserves, and jewelry demand as well. Now, looking at this chart by Statista, it shows the distribution of gold demand of global demand in 2023 by sector. Right, you can see here, the jewelry sector compromises or it's the largest sector, making up almost 48, almost 49% of gold demand in 2023. And this is a trend that usually persists over many years, right? So one of the largest sectors for gold demand comes from jewelry, jewelry production, jewelry manufacturing, right? And then the second largest sector is investments at 23%. Now, this can be investments in forms of physical gold, gold ETFs, gold mutual funds, and so on and so forth. Next is central bank buying. Central banks made up 21.2% of demand in 2023. And finally, the final sector is technology. This is about 6%, right? And this, or 6.7%, and this is used for uh, in many applications such as PCB printed boards, right? PCB printed boards, electronic PCB printed boards, where the conductors, right, the conductor tracers are printed or are rather are plated in gold, right? As gold is a good conductor of electricity and a good conductor of a good conductor of electricity as well. So that's why we have gold being used a lot in technology as well, although it makes up just 6.7% of total demand. Right, gold consumption, right? It's also important to note who are the biggest consumers of gold, right? So as of 2022, right, China was the biggest consumer of gold with about 824 metric tons, followed by India in second position by 774. And you can see the other countries fall well short of the demand that is or fell very short of the consumption that is seen in India and China. Right? Even if you combine the top four, I would say, yeah, if you combine the top three, or sorry, the next three consumers after India and China, they still don't hit the level of consumption that was seen by India, let alone China, in 2022. Right, so you can see here, right, if for whatever reason, right, China and India see a huge drop off in consumption, right, that's really going to have an impact on gold prices, right? We can expect a huge proportion of demand to fall off the market, but however, that's quite unlikely. That's like one of those 1% scenarios where suddenly you see either China or India, or maybe even both of them suddenly see a huge drop in demand of gold around the same time. Now, gold versus recessions, right? Not, as we mentioned, gold can function as a good hedge against uh, high inflation, also during recessionary periods, but also that is dependent on the level of interest rates. And we can see here, we have this chart here that shows how gold performs during past periods of US recessions, starting from 1970 to early 2020. Right. So we can see here, during the 1973 recession, gold prices actually surged almost 87%. So during this period here, during this recessionary period, we can see gold appreciating quite strongly. However, during the 1980s recession as well, gold prices also surged as the recession was taking place. This was a much short-lived recession. in 1981. During this recession, gold prices were actually falling. Going into the recession, now this can be due to a lot of other factors as well. Remember, it doesn't simply mean that just because we have a recession, gold prices are going to automatically appreciate in price, right? Similarly, just because we have a geopolitical conflicts taking place, it doesn't mean gold prices are going to surge and remain elevated, right? There's a lot of other factors that come into play, right? And especially the level of interest rates has a huge bearing on uh, whether gold is going to be sought after or not, right? So you can see here during the various periods of US recessions, right? You can see sometimes gold prices rising sharply, sometimes gold prices falling, even some instances like in 1990 and in 2001, gold prices remaining somewhat flat, right? So you can see here it's all due to the various macroeconomic environment that is currently in place during each of these respective recessionary periods. So take note, just because we are heading into a recession or we expect a recession to take place in a few months or in a few years, it doesn't necessarily mean gold prices are going to appreciate strongly. It all completely depends on the overall macroeconomic environment, the level of interest rates, the level of the value of the US dollar, and all that comes into play as to whether gold prices are going to appreciate, remain flat, or in some cases even pull back as well. Now, central bank demand has been very strong since 2022, right? As the US froze the foreign assets of Russia, right, due to the invasion of Ukraine by Russia, the US proceeded to freeze a lot of the foreign holdings of Russia, which were probably US dollars and US treasuries, and that prompted a lot of other central banks, to embark on buying physical gold as well as a hedge against holding US assets in case of potential freezes in the future as well, right? So you can see that when the US seized the foreign holdings of Russia, right, a lot of central banks were, a lot of nations, sovereign nations were sort of startled by this action by the US, and that prompted many major central banks around the world to shift some of their foreign reserves, such as US dollars and US Treasury bonds, into physical gold, right? So we saw central banks ranging from Turkey, Saudi Arabia, China, India, and many others as well, moving or shifting some of their foreign reserves into physical gold. So hence you can see a noticeable pickup in gold demand by central banks from 2022 onwards. Right, you can see a jewelry production is the one in blue that has been relatively stable, right? Except of course during the COVID lockdowns, there's a huge drop in demand for there was a huge drop off in demand for gold or in demand for jewelry, which of course would lead to lower fabrication output. Technology is generally stable as well, especially over the last 3 years. Then ETFs have been outflowing since 2021 to 2023. ETFs and other similar products have seen outflows with regards to gold investments. And then central bank net purchases, which is the one in the purple here, we can see them rising pretty steadily, right? We can see here 2021 was a big step up from 2020. 2022 to 2021 was an even larger step up, and 2023 was relatively strong demand as well. So you can see here a lot of the uh, demand from or a lot of the new demand for gold is coming from central banks since 2022, which is also kept prices supported, right? Generally, we have seen prices kept supported, and one of the main reasons can also be attributed to heavy central bank buying. So it's always a steady buyer, so to speak, for gold, especially during pullbacks over the last 2 to 3 years. Now, macroeconomic data will also drive central bank actions, right? And as the Federal Reserve geared up for the first rate cut in September of last year, right, there was a lot of rate cut expectations being built into the environment, and that eventually we saw the Fed moving ahead with three successive rate cuts at the end of 2024, right? Uh, as we saw cooler inflation in the US, particularly from the point of CPI and PPI, right, that raised rate cut expectations since the second half of 2024, and rate cut expectations back then drove bond yields lower and also drove the value of the US lower. This in turn nudges gold prices higher, right? So when you have an environment where we see bond yields, treasury bond yields falling, and as well as the value of the US dollar falling. These both of these can provide strong tailwinds for gold prices, and we can expect gold prices to push higher in such an environment. Now, a weakening labor market also fuels expectations of aggressive rate cuts, right? If the US labor market is starting to slow down, right? And then this would cause the Fed, right, to move ahead with rate cuts as they're trying to lower interest rates to spur the economy. All right, now with that, let's move on over to the charts and trading view and take a look at where this precious metal is trading, right? So here I am on the daily time frame for spot gold, XAU, USD. I'm on a daily time frame, and we can see, right, after making its latest intraday all-time high on Tuesday, 22nd of April, at $3,500 per ounce, we've seen gold prices fluctuate quite wildly, right? We can see that prices fell as much as 8.5%. In about 2 weeks, in a period of 2 weeks, before rebounding strongly to jump 7.3%, and finally to reverse sharply as well last week, dropping as much as 9%. So we can see after making its latest intraday all-time high on Tuesday, 22nd of April, gold has fluctuated pretty wildly, dropping 8.5%, rebounding uh, dropping 7.3%, rebounding 8.5%, and then dropping 9% once more, right? So you can see here why we say, right, gold is, despite being a safe haven asset, despite being a precious metal, right, a sort of the precious metal, this commodity can always be subjected to high fluctuations and high volatility as well, right? So very clearly in terms of technical levels, right, the first major resistance for spot gold is going to sit at this multi-swing high resistance at $3,430, and we can label this here as the first resistance, right? In terms of support, right, I see when gold prices dropped as low as $3,120 per ounce on Thursday, 15th of May, it actually bounced off what I had labeled as a pullback support. Now we can see here previously, back in the first week of April, gold prices made a swing high resistance and it formed an intraday all-time high back then on 3rd of April. Prices pulled back quite sharply over a period of 3 to 4 days, stabilizing at around 2,980 before staging a very strong rebound. That as price breaks through this prior swing high resistance, this prior swing high resistance can now function as a potential pullback support level, and that was what had happened very nicely last Thursday, 15th of May. So when price bounces off the pullback support, right, this level here at 3,132 was initially hang on. Right, so as price breaks above this prior swing high resistance, right, this level at 3,132 can now function as a potential pullback level, and that's what had happened on 15th of May. So as price bounces off the pullback support on 15th of May, right, this pullback level now turns into an overlap, which we can label as the first support. Now, similarly, we have a prior swing high resistance being formed here on 24th of Feb. And when this level gave way, or when price broke above this level on 13th of March, this swing high resistance could function as a pullback support. And this is where gold prices once again stabilized in the second week of April. So this is why it's important to take note of significant resistances and support levels from the past, because this is levels that are likely to be tested in the future as well. And we can see that very clearly for gold. We can see two prior swing high resistances proceeding to function as support levels in the future. So similarly, this level at $2,954, right, initially functioned as a pullback support level after gold prices broke higher on 14th of March. And then as we play this out, we can see gold prices as it fell sharply between or it fell sharply in the first week of April, it managed to bounce off the pullback level on 7th of April, and this creates an overlap, which we can label as the second support. Right, so once again, right, it's important to take note of prior resistances because they can tend to function as pretty strong support areas in the future. So similarly, right, this is a multi-swing high resistance at 3,432. So if in the coming weeks we see gold prices break higher, right, if it breaks higher, it closes above the first resistance convincingly. This first resistance is likely to function as a pullback support area. Right. Now that we've identified the first and second supports, we can run a couple of Fibonacci retracements. Right, we can run the first one from this swing low on 7th of April, going up to the intraday all-time high, looking at all the fibs. Right, in this retracement, right, we can see none of the uh, levels sit close enough to the first support. That's fine, right? Remember, don't force the Fibonacci retracements onto the analysis unless they align close enough to a predefined support or resistance level. Now let's try another one. We have another swing low beginning from 28th of Feb. Let's try this one out, right? In this case here as well, right? Once again, we see none of the retracements sit close to the first support, but we do see 78.6% sitting pretty close or sitting just above the second support. So on this uptrend, we will keep the 78.6% Fibonacci retracement. And we'll identify this as the second support zone, ranging from $2,975 per ounce down to 2,954. Now we can run one more Fibonacci retracement, this time from this swing low here on 14th of November 2024, going up to this intraday all-time high. Let's take a look at all the fibs. Now, on this retracement, we can see the 38.2% retracement aligned very well with the first support, whereas 50 and 61% are in sort of no man's land. So once again, that's fine. So we'll just keep 38% here. Right, this is important, right? Never force the Fibonacci levels onto the analysis unless they line up well with the predefined support levels, like this as what we saw here for 38 and 70.6%, or if it lines up well with a predefined resistance level. Now, with gold prices rising higher, and this is the intraday all-time high at 3,500, where can we identify the next major resistance beyond this area? So in such a scenario, we can rely on Fibonacci tools such as Fibonacci extension. So to find this Fibonacci extension, we're going to be running a retracement from this swing high on 6th of May, going down to the swing low on the 15th. Key extension levels sit at 127 and 161%. So we can see here where the intraday all-time high is formed, right? This is where we can either label this second resistance, right? This is where we can label the second resistance. Oops, hang on. This needs to be a red box, right? So where the intraday all-time high was formed, we can label this as the second resistance, which is a level accompanied by Fibonacci extension at 127%. And of course, should we see gold prices continuing to surge higher, we can then use the extension at 161% to identify the next potential resistance barrier, and that sits at $3,629. Now, these resistances are important because they help us identify potential take profit targets for the long trades. We can see here, after bouncing off the first support on 15th of May, gold prices have rebounded quite strongly, especially yesterday, Tuesday, 20th of May. Right, so as gold prices look to be supported, we can once again target the 61, we can once again target potential take profit area close to 3,430, which is where the multi-swing high resistance sits. In between, we can also target potential intermediate resistance areas, and we can do that by looking at the Fibonacci retracements between 50 and 61.8%. And we can see here, right, gold prices are sort of within this zone, right? So this is something to take note of as well. If you can see gold prices clear this zone, especially the 61.8% retracement, right, then we are likely to see a much stronger move to the upside, right? So you can take the 61.8% Fibonacci retracement as some sort of confirmation level to see whether gold is going to continue to climb higher or not. Right, so these are the key levels here on gold for the daily time frame. Right, let's see if there's anything else that we can spot as well. Right, okay, on this downtrend here, we've also seen gold break through, right? This may not be the cleanest descending trend line, but maybe when we go on down to the 4-hour time frame, we can see that price is also broken out of a pretty significant descending trend line. So on the daily time frame, this doesn't look to be a very convincing descending trend line, but perhaps when we go down to the 4-hour time frame, we'll be able to fine-tune this barrier here. And so that what I'm also trying to point out is, as price bounces off the first support at 3,132, price also breaks through the descending trend line. It triggers a potential bullish breakout, and we saw gold prices rally quite strongly, especially on yesterday, Tuesday, 20th of May. Since the breakout took place, right? Since the breakout took place on this week, we've seen gold prices rally as much as 3.3%. Right, these are the key levels here. And on a slightly longer term uh, outlook, there's also a pretty significant ascending trend line to be aware of, right? This ascending trend line is going to be pretty important in the future as well, right? Does it stretch? Okay, I think this is pretty fine. We can see gold prices have bounced off this ascending trend line several times in December of last year, January of this year, March of this year, April, and of course, as recently as 15th of May. So very clearly, this is a very important ascending trend line. And if this ascending trend line gives way, we could see a much deeper pullback take place. And you can see here, it's always important. It's always important to be aware of such ascending trend lines, right? Even here, we had a pretty significant ascending trend line. Let's zoom into this area here, right? Between August and November of 2024 last year, right? We see gold prices rising steadily, right? We see gold prices rising 16.7%. And then after it broke through this ascending trend line, we can see it dropped quite steeply, right? It dropped as much as 6% from the breakout point, and from the peak, it dropped of almost 8.7%. So a pretty strong pullback. Once descending trend, once ascending trend line such as this gets taken out. So it's always important to be aware of the critical ascending trend lines. Right, okay, now let's move on down to the 4-hour time frame and see if you can fine-tune the analysis. Right, on the 4-hour time frame, I think we are able to fine-tune the descending trend line, right? So we can see here on the 4-hour time frame, we can spot a very clear descending trend line. In fact, I would say we have a very nice downward channel, right? We actually have a very nice downward channel that had been in place from 7th of May till the 15th of May, so for a period of 1 week. Gold prices were trending lower within this downward channel, and then once it bounced off the first support, we saw a nice bullish reversal materialize. And then, of course, once the bullish breakout takes place here, the bullish breakout took place on 15th of May, price moved a little bit higher. And in some cases, the bullish breakout can return as well. You can see price returning, but as long as it stays above the prior channel, right? As long as it stays above the prior channel, it's very likely we can see price remaining supported and climb higher. So take note, once a bullish breakout such as this takes place through a channel such as this, sometimes price can pull back towards the upper trend line of the downward channel. But if price manages to hold above it, typically we can expect prices to stabilize and climb higher. So you can see here as prices pull back last Friday, it managed to stabilize just above the upper trend line of the downward channel. And since then, gold prices have rebounded as much as 4.2%. Right? So it's important to take note of such structures, such as downward channels, upward channels, ascending trend lines, descending trend lines, because when a break takes place through such market structures, right, it can really help us identify opportunities to go long or short. So in this case here, as price bounced off a very important support level, the pullback level at 3,132 and the 38.2% Fibonacci retracement. That gave us the first clue that gold prices look to be supported. And the second clue comes when gold breaks out of the downward channel. And then The third clue is when gold stabilizes above the downward channel. Remember, it did not re-enter the downward channel. If it had re-entered the downward channel, then of course maybe we could see gold prices continue to fall, but that did not happen. So the third clue was gold managed to remain above the downward channel, and we saw a nice rally of 4.2%. Right, so in the current context, gold is currently testing the 61.8% Fibonacci retracement, right? If you can see a clean break through this level here this week, right, then we can have a bit more confidence that gold could make a good run towards the first resistance, right? It's not a guarantee that gold is going to rally strongly all the way up to $3,430 per ounce, but if it can clear the 61.8% retracement, right, and if we see a weaker dollar and we see geopolitical concerns or global uncertainty start to rise once more, this could push this precious metal pretty high, and we can target close to the first resistance as a potential take profit target, right? So here, first resistance is a swing high level on the 4-hour time frame, is a swing high resistance, and on the second resistance is also another swing high resistance formed on, of course, 22nd of April here. So you can see when we go down the time frames, right, it is fine to adjust or to fine tune the levels as well, right? We always try to catch the body of the candle, right, and try and identify a strong resistance zone. Oops, okay, wait, hang on. Yeah, just let me do this. Yep, there we go. Right, so these are the key uh, technical levels for gold on the daily and 4-hour time frame, and we've seen and we're continuing to see a nice rebound as well. On the 4-hour time frame, I can spot another pretty important ascending trend line, and we can see since 15th of May, gold has bounced off this trend line several times, right? We've seen it bounce off on 16th of May a couple of times. Then again on 20th of May, which was yesterday, a couple of times as well. Remember, these are 4-hour candles, and we've seen gold prices climb higher. So this is also another important ascending trend line to be aware of, because if this ascending trend line gives way, then we can expect another drop towards the first support, or even another drop towards this larger trend line that we saw on the daily time frame. Right, there we go. Remember, this really critical ascending trend line on the daily time frame is super important. And of course, something more immediate is this ascending trend line on the 4-hour time frame. All right, are there any questions with what we've covered so far? Right, right, okay. Let me see if there's anything else that we can incorporate into this analysis. All right, let's return to the daily time frame and look. Oops, and look at this chart with the RSI and stochastic oscillators, right? What I want to show here is also when um, the respective, remember the RSI and stochastic oscillators are momentum indicators, and they help us identify potential overbought and oversold conditions. So what do I mean by overbought and oversold conditions? That's when the RSI climbs above 70, and at the same time we see the stochastic oscillator hitting 90 and above. When the RSI is about 75 and above, stochastic oscillator is about 90 and above, it indicates a potential overbought condition, and that sometimes signals uh, a stall to rising prices, right? It perhaps signals a potential stall to rising prices, and we can expect prices to make a pullback. Conversely, when RSI drops towards its lower threshold, if it drops close to 30 or lower than 30, while stochastic oscillator also drops under 20, this helps us identify a potential oversold condition. An oversold condition means we expect to see price stabilize and make a bullish reversal. So we can spot several oversold conditions on a daily time frame. There's one nice one here on 14th of November. We see gold prices stabilizing at around $2,560 per ounce and staging a pretty strong rebound. We see another oversold condition being identified on 19th of December last year. Gold prices stabilizing around $2,586 per ounce and in this case here staging a very strong rally. And the most recent one is here as well, a clear-cut one on 14th of May, right? We see RSI dropping as low as 44 and stochastic oscillator dropping as low as 10.7. And we did see gold price stabilize the next day, right? On 15, we did see gold prices stabilize and stage a pretty strong rebound, right? So on the daily time frame, it is also important to look at the level of the RSI and the stochastic oscillator as well, because they help us identify spot oversold conditions such as these three here, telling us that we can have a potential opportunity for gold prices to stabilize and make a nice bullish bounce. Similarly, as we spot overbought conditions, right? Remember, these green vertical lines are going to be my oversold condition, which means a potential buy opportunity, or rather, which means a potential bullish reversal opportunity. Whereas these are, remember, green vertical lines are oversold conditions, which means we can expect gold prices to stabilize and make a bullish reversal. Whereas this red vertical line that I'm going to show now are potential reversals, bearish reversal opportunities, because these highlight overbought conditions. Now you can see RSI hitting 77.3, stochastic oscillator hitting 97, and the next day we did see gold mark its all-time high and fall quite sharply. Right, so we can see here the instances where we can spot nice uh, overbought conditions. Even here on 31st of March, RSI hitting 77, stochastic oscillator hitting about 98, and then a couple of days later, we did see gold prices stall and make a pretty strong pullback as well. So take note of overbought and oversold conditions, because they can help us identify the significant tops and the significant bottoms for gold as well, and it enables us to have a buy the dip opportunity as well. And not only buy the dip, and if you see an oversold condition such as something like this being highlighted, and if you are long on gold, it can also help us to provide a signal to manage our position a little bit more closer, right? Maybe we would start to trim our position, right? Maybe start to book some profits, or even start to trail the stop loss order a lot more tighter, right? Because that means that we are reaching overbought conditions. We can expect prices to consolidate, to slow down, and even make a pretty strong pullback as well. All right, okay. Let's see if there's anything else that we can cover. Let me see. All right, this is on the daily time frames. So take note on the daily time frames. That's when we get pretty good overbought conditions and oversold conditions. On the H4 time frame, let's check it out. On the H4 time frames, you can also get a pretty good oversold condition here. You can see here this was formed a little bit later on Thursday, 15th of May. Right, RSI dropping down to 26, stochastic oscillator dropping down to 3.4. We really did see gold stabilize at the first support and bounce quite strongly. Here, let's see if we look for something similar. Right, you can see, okay, let's fine tune a little bit of this oversold conditions here. So on the H4 time frame, nice oversold condition on 15th of May, 10 a.m. GMT time. We have another pretty decent one here as well. You see RSI coming quite close to the level of 27, stochastic oscillator around 9.8. And once again, we can see gold stabilize at around $3,200 per ounce and stage a very nice rebound, right? Very similar to this setup over here. Right, another nice oversold condition here as well. This one maybe not the best. You don't see RSI dropping as low as possible, as low as 30, right? RSI just drops down to 35, right? So, but we did see gold prices stabilize, but it didn't result in a strong bullish reversal. Where we see a strong bullish reversal is this oversold line here on 7th of April, 10 p.m. GMT time. We can see RSI dropping as low as 22.7, stochastic oscillator dropping as low as 19.32, and of course we see gold prices stabilize. In fact, this looks like a nice double bottom before gold bounces and rebounds strongly. So you can see here, oversold conditions are important to spot because it can really help us identify potential bottom uh, for gold, and we can see here, even if we didn't catch it right at the bottom, of course, no one's going to catch it right at the bottom, but yes, it's coming out of the bottom. You can see this rally was as large as 15.4%. This second rebound here, right? No one's going to catch it right at the bottom, of course. Let's just say we can catch it as it's coming out. This rally was as high as 5.3%. And even the current one, right? Even the current one, if you catch it here on the next 4-hour candle, this rally has been so far as high as or as large as 4.6%. So that's why it's important to identify oversold conditions on gold on a daily and H4 timeframes, as they help us identify very nice bullish reversal opportunities. And this has played out consistently, right? This type of oversold conditions, spotting oversold conditions has played out consistently. Even this one here, okay, this one on 10th of March, 10 p.m. GMT time may not be the most obvious signal because RSI only drops to as low as 38. But because our stochastic oscillator is pretty deep in the lower threshold, and especially when you see price stabilize like this, you can see another nice rebound has materialized as well, right? Another 5.5% move, a very clear oversold condition was on 28th of Feb, right? RSI dropping as low as 21.28, stochastic oscillator dropping as low as 8.4. And as gold prices start to come out of this bottom here, you can see here it rises 2% first, but then after that it leads to a much larger uh, gain as well. All right, before I continue, I'm just going to launch a poll as well. I truly appreciate it if you guys can give your feedback with regards to today's webinar. And of course, should you have any questions with regards to what we've covered today, please do drop your questions in the Q&A box or the chat box, and I'll be more than happy to answer your queries. All right, great to see all the responses coming in. Truly appreciate it, guys. All right, hi W, good to see you as well. Thanks so much for tuning in, right? Truly appreciate it. All right, I think that's almost all of you who have voted. I'll just keep the poll running for another 20 seconds or so. All right, great. Thank you so much. All right, if there are no further questions, all right, then I think we'll call it a wrap. All right, once again, thanks for tuning in to today's session brought to you by IronFX, where we take a look at gold, where it's a good where it's a good value, a store of value. And we looked at a bit of the fundamentals as well, and then we wrap things up by looking at the technical analysis and the current setups that are available to us, right, or that could present itself, and why it's also important to take note of momentum indicators such as the RSI, the stochastic oscillator, or the H4 daily time frame, because they help us to identify uh, significant oversold and overbought conditions. Okay, this question by David: was the best trading pattern supply and demand or resistance? Right. So in a sense, resistance and support are sort of like indirectly related to the supply and demand for gold as well, right? In the sense of investors and traders trying to find bids as well. So when price hits support, this is where we can expect a lot of buyers to come in. And as price rises up towards a predefined resistance area, that's where we can expect a lot of sellers to come in as well, right? So in a sense, that's how we can look at demand and supply as well in relation to uh, support and resistance, right? I hope that's answered your question, David. Right, if there's nothing else, right, then once again, thanks for tuning in, and do look out for all upcoming webinars brought to you by IronFX. Tomorrow, we've got a session at it's going to be at 9, I believe it's going to be at 9 p.m. GM or 9 a.m. GMT time. So tomorrow, Thursday, 9 a.m. GMT time, we've got a live analysis session, I believe, and my colleague will be taking that, will be conducting that webinar. All right, so do tune in for tomorrow's session as well. All right, thanks everyone. Take care. Have a great trading week, and looking forward to catching all of you at the next session.